Tuesday's session saw stocks slide as geopolitical tensions flared. Tech tensions bubbled up and retail sales disappoint. Markets ended up closing lower on fears of the U.S. getting involved in the Israel-Iran conflict, a brewing rift between OpenAI and Microsoft, and weaker than expected sales data dragging indexes lower. Here's your daily brief for Tuesday, June 17th. Overnight, reports suggested that Iran was open to de-escalation talks. But by Tuesday morning, President Trump signaled stronger support for Israel, even weighing options for deeper U.S. involvement. Barron's reports that Trump called for unconditional surrender from Iran while hinting at possible military backing for Israel. Because the markets initially cheered hopes of a truce, sending oil slightly lower in pre-market trading, this sharp pivot reignited fears of a broader conflict, lifting oil prices over 4% intraday and feeding into further investor anxiety. Therefore, equity markets turned lower as traders priced in the risk of further regional escalation, potential supply disruptions through the Strait of Hormuz. As geopolitical risks spiked, another headline ended up rattling the tech sector. On Tuesday, news broke of escalating tensions between OpenAI and Microsoft. According to Axios, OpenAI is exploring whether it can restructure or even exit part of its deal with Microsoft, possibly even filing antitrust complaints over control of products and compute access. Now, because this partnership underpins many enterprise AI deployments, with Azure hosting a large share of OpenAI's workloads, any fracture raises questions about cloud spending, AI deployment, and competitive dynamics. Reports mention that OpenAI is even starting to diversify its compute through companies like Oracle, Google, and SoftBank in anticipation of a fallout. Therefore, AI and cloud-related stocks traded cautiously with the broader tech sector. And beyond tech, disappointing consumer data added to the late-day pullback. On Tuesday morning, the Commerce Department reported that May retail sales fell 0.9% versus economists' expectation of falling 0.6%. And excluding autos, which really drug the category down, retail sales still fell 0.3%, which was still greater than economists' estimates. Because weaker than expected spending, especially in autos and building supplies, suggests that consumers may be pulling back amid higher borrowing costs and geopolitical jitters. Therefore, consumer discretionary stocks declined and broader growth-sensitive sectors came under pressure, reinforcing concerns that economic momentum may be waning even as wages remain steady. With these cross-currents in mind, here's what to watch next. Key items for Wednesday include keeping an eye on the Middle East developments. Any further statements or actions from Iran, Israel, or the US could swing oil and risk assets sharply. And finally, the Fed rate decision comes in tomorrow, with many expecting the Fed to continue to hold rates steady as they wait for further data and clarification. Let me know what you'll be watching out tomorrow in the comments below, and as always, like and subscribe for more content and more context.